Hello and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra. You're watching Your Stocks this afternoon. Well, it's turning out to be a session which is a lot about the financials and the kind of gains that we've seen for the Bank Nifty. So currently we have the Bank Nifty which is sitting at a record high, going from strength to strength, up around 2.5% currently for the Bank Nifty. In terms of stocks, it is ICICI Bank which is really leading from the front when it comes to the financials. So that stock should come up for you at a fresh 52-week high. It's now the top gain on the Nifty, up around 4.8%. SBI, Axis, IndusInd, all of these stocks up anywhere between 2.5% to 3.6%. Remember that the numbers from the financial space have largely been positive. So, for example, case in point would be Axis as well as ICICI Bank. Both the big corporate lenders have, delivered this quarter in terms of their numbers as per street expectations. SBI still to come out, so that stock probably is getting a little bit of a positive rub-off based on what the other companies have reported or banks have reported. So that stock too is up around 3.7%. That stock is in fact rallied around 29% year to date. Remember, last year it was a bit of an underperformer. This year it's really caught up. But joining us then, we have Astha Jain, research analyst at Hem Securities, Kush Bohra, founder of kushbohra.com, to answer all of your stock queries. Astha as well as Kush, welcome to the show. Well, Kush, before we kick off in terms of queries, wanted your thoughts on the kind of traction that we're seeing for the financials today.
Hi, Ekta. Hi, Astha. First, a very good afternoon. Well, very encouraging. I think, if we talk about the financials in terms of at least the Bank Nifty, the move was actually long overdue. There's been a fair bit of volatility, but glad to see that, it's broken above the resistance zones. I think, 50,000 is perhaps a mere formality now, but once that is taken out, we're looking at much higher levels of 51,500 as well. The overall market is actually a buy on dips kind of, a market right now. I think the same will very largely apply to Bank Nifty as well. And the fact that some of the heavyweights have actually stopped falling. Some of them have actually started rising as well. But the fact that, the likes of HDFC Bank have stopped falling will perhaps, be a strong point in the Bank Nifty and the financial space overall moving ahead from here.
Okay, all right, fair enough. So you're thinking that 50,000 is probably a mere formality for the Bank Nifty. Any targets by when we could get there based on the momentum that you're seeing?
Well, just based on the momentum, it could be as early as, tomorrow. Today, perhaps a little bit of a stretch, but, perhaps as early as tomorrow. But even if, as I said, that doesn't happen, if the, Bank Nifty does take some sort of a knock and there's profit booking and you see, 48,800 or thereabout levels, I think that will be a good entry point. So the buy on dip structure that we just spoke of will remain intact. If you've got an existing position, it's not a bad idea to continue holding on to that one and trailing your stop loss given the momentum that we are seeing. So, this momentum could perhaps, take Bank Nifty to 50,000, as I said, as early as tomorrow.
Okay, all right. Well, let's get in some queries now. We have Bharti, who writes to us from Mumbai. She holds 40 shares of Axis at 696. She's asking if she should hold or exit at current levels. So she's sitting on an excellent profit there. And, it is progressing well in terms of the numbers. And we've been talking about that, Astha. The net interest margins surprised positively. The asset quality trends were stable. There were no major red flags there. And even ICICI for that matter. But just talking about Axis, what would your thoughts be? And would you recommend possibly holding on, maybe even adding at these levels?
Good afternoon, Ekta. Talking about Axis Bank, first of all, our stance is buy as well as hold. So we are recommending both these strategies on this counter. Now, the immediate price target which we are seeing on this counter is 1270, with a disclaimer that this stock we might hold in our PMS also. So talking about Axis Bank, yes, the results were on the positive side. You have said absolutely right that if we talk about their GNP and NNP ratio, too, slippages have really moderated, and that's why their GNP was at around 1.4% and NNP ratio was at 0.3%, which is looking very attractive. What is working positive for this bank is their retail book. So what we are seeing, that retail book is which is giving strength to this bank. And going ahead also, we are expecting this bank to maintain ROA of around 1.8%. So looking at all this, we think Axis Bank is well poised to show more returns from here, and that is why we are recommending buy as well as hold. Initial price target can be kept at around 1270 to 1300 odd levels.
Okay, all right. And technically, how would you approach the stock given 30% plus returns in the past 12 months, Kush?
So interestingly, even if I look at the last few days move where the stock has actually made more than about 10-15% kind of a jump already, the stock was actually under a bit of a pressure. So this is more of a catch-up rally, for the last few sessions or last few months that the stock has been under pressure. The stock's not even close to the overbought territories just yet. So incidentally, the technical and the fundamentals collide here. Where if you are holding the position, continue to hold on, just have a trailing stop loss close to 1110 levels. That would also be the stop loss for a fresh entry. And on the upside, the stock could very easily touch 1220 and 1260 kind of zones. So hold if you have an existing position, and you can also add more, given the current momentum that the stock is seeing.
Okay, all right. So that's on Axis Bank. Well, let's get in another query now. We have Rahul Kumar who writes to us from Bangalore. He holds 30 shares of Yes Bank, which is bought at 20. Long-term investor wants to know whether to remain invested or to sell at current levels. Well, Kush, I'll come to you first on Yes Bank. What is your approach towards Yes Bank, considering, the kind of volatility in the past that we've seen for it? Do you think that the technicals are now stable and it's a long-term call?
Well, not really, because as you said, volatility is still pretty high. If you see even today, the stocks actually come off the highs pretty sharply. But that said, the kind of momentum and the setup that we are seeing, from a technical standpoint, there are a few positive, divergences setting up on the Yes Bank chart. Suggests that the stock may at least, have a very limited downside from here. The momentum could take the stock higher to the high that it made today, 28.50, and then perhaps 30 levels also. So my suggestion would be to book some profits partially and hold the rest for targets of 30. Plus, it's a good idea to have a trailing stop loss in place somewhere close to that 20 level, 25 levels, given the buying price is 20. So book partially, hold the rest for targets of 30.
Okay, all right. Book partially and probably look at targets of around 30 odd rupees. That's the word coming in on Yes Bank. That stock is higher today because of its numbers. It came out over the weekend. Remember, there was a tax write back this quarter that they reported, which did aid the profitability. On that note, Astha, what is your opinion on Yes Bank and the fundamentals?
If we talk about Yes Bank, yes, the fundamentals are looking intact, basically on the back of a strong financial performance, which this bank has shown. And what we have seen that on the back of the lower provisions, their profit has shown a sort of increase. Going ahead also, in fact, they have shown some sort of decline in their GNP and NNP ratios. So that is also working well for this bank. And profitability has shown a strong rise. So looking after all above, this bank is looking good to us in the medium-term perspective. However, one can book some sort of profit. But for the medium term, we are giving a whole recommendation with the price target at around 30 to 32 rupees.
Okay, all right. Price target of around 30 to 32 rupees, so similar price targets there. We have Mr. K.S. Rao now on the line from Andhra Pradesh, has investments in SAIL. Hi, Mr. Rao.
Yes, madam. Yes, sir.
Go ahead. Your question about SAIL.
Madam, I brought that SAIL shares, 300 SAIL shares at the rate of 100 rupees. Please inform that cross checks. Can I hold that? I can hold them up to 2 years, further period of 2 years. What is the prospects of the shares?
Okay, all right. Well, Mr. Rao wants to hold these shares for a 2-year horizon. He's already sitting on a profit. Astha, let's come to you first. What would you recommend?
So talking about this counter, since the horizon is 2 years, that's why I'm giving a whole recommendation. Otherwise, I would have said that book some profit, but now the horizon is long term. So first of all, want to give the target. Target for whole recommendation is at around 200 to 205 at the initial level. Now talking about this counter, what we are expecting that some sort of volume growth we can expect around 21% in their upcoming result, but we are expecting at the same time realizations to decline, and that too at around 2500 per turn. So that is what we are expecting from the upcoming results. But one thing which is important for SAIL is that it is in the next phase of capex, and due to this we really want to see how this will going for the company, because what we can see is that due to this capex there may be some issues for the debt, or debt can remain at the elevated level. So we really need to see how the execution is going on, and that's why recommending hold and not a buy. But the horizon is long term, so yes, a hold. Price target can be set at around 205 to 210 at the initial levels.
Okay, all right. And what about you, Kush? What would you recommend on the technicals from a 2-year horizon? I know it's a bit long term, but your perspective based on the trajectory.
So first, congratulations to the gentleman for buying it at such a low price and holding it on, till now. Assuming that he doesn't trade very actively, then it's a very clear hold, and the targets are very similar here, 195 to 200. But if he does perhaps trade a little actively, then we are seeing some negative divergences after the sharp move that we've seen in the last month and a half in sale, suggesting that there could be some profit booking around the corner. So if he is into perhaps a bit of active trading, then it will not be a bad idea to book here 50% and then buy again close to 145, 150 zones and continue to hold on the entire quantity from there on. So depending on his trading pattern, this will be the two views.
Okay, all right. Well, now we have Krishna, who writes to us from Mumbai, holds 100 shares of Aster DM Healthcare, which is purchased at around 505 odd rupees, wants to know whether to hold or sell, also wants to know the stop loss and the entry level to add more. Well, it's completely undergone a transformation in terms of a business model, Aster DM. Now it's only the India business which is available. What is your sense in terms of how you would approach Aster DM in the new avatar and the fact that they would probably have some cash on books as well?
So here we really like to wait and see, but yes, because what we have heard from the management that they have plans to deploy 1,700 bed over the next few years. So I think, and that is this is the expansion which they are. It will be a combination of both greenfield as well as brownfield. So we really need to look how this will going to work. And secondly, in fact, now because their major presence is in the Kerala, and now they are looking to expand in the Maharashtra and Tamil Nadu. Although Kerala is the major presence area for them apart from Karnataka, but now they are planning to expand into the Maharashtra as well as Tamil Nadu. So I mean the management is giving some sort of insights in on their future business strategies, which we really need to look how it will be going to perform. In fact, management has also said that their ARPOBs will be increasing from 40 to mid 50s rupees over the next few years. So now it has become the story for next few years rather than immediate, in the short term. So here the stance is hold for the long term, although initial price target is lower than the cost price of this gentleman, because what we are setting initial price target, it is at around 410 to 415 odd levels. But still, on the basis of the management optimism, we really want to give it a chance and recommending a hold on this counter, although price target is only 410 to 415.
Okay, all right. And what about you, Kush? What would your opinion be on the technicals of Aster?
So I think the question perhaps is should he add more? Perhaps there's a temptation because of the big fall. I don't think this is a stock that you'd want to add more just yet. And as far as the stop loss goes, there's a support zone 330 to 345. The weekly low that the stock made last week was also close to this zone. So I would place a firm stop loss at 330. If the stock falls to or below that level, it's a very clear exit. But if that is if that is held, then perhaps the stock could see some sort of a rebound to 380, perhaps 400 levels also, where he can exit, even though at a loss, but at a slightly lesser one. So don't add more and have a stop loss at 330.
Okay, all right. So that's on Aster DM. Well, we need to take a quick break, but more queries on the other side. Stay tuned. Welcome back. You're still with us on Your Stocks. We have Astha Jain, Kush Bohra answering all of your stock queries. Well, Asil Roshan now writes to us from New Delhi, holds 100 shares of Ujjivan Small Finance Bank, which is bought at around 59 odd rupees, sitting on a loss at this point in time, marginal loss, you'd have to say. Wants to know what to do, whether to hold or to sell this particular counter. Well, let's come to you, Astha, on this one. What is your fundamental call on Ujjivan?
So we are basically looking after the guidance in which management has given the guidance of the AUM growth of more than 20%. And in fact, they were saying that CDR ratio will remain at a comfortable level of around 88%. And the bank has partnered with 2 fintech companies also in order to increase their supply chain financing. So all in all, looking a decent stock right now. Recommending a hold because the cost price is 59, so it is far from the current level. But what we are expecting that the stock can move to the level of 60 to 61. So recommending a hold on this counter on the back of strong guidance by the management.
Okay, all right. And technically, what would you recommend, Kush, on Ujjivan?
So the stock's in a range. If I look at the broad range, then it is 55 on the upside and 51 on the downside. The way I would play this is perhaps wait for the stock to break on either side of the range. So if let's say the 51 level is taken out, then I would exit from this, because at every rise the stock seeing some sort of selling pressure, and there is convergence of the averages around that 51 to 52 zone. So 51 remains a strong support zone. If that is taken out, then I will exit. If 55 is taken out on the upside, then the stock could see the momentum and perhaps the buying price also of the gentleman.
Okay, all right. Well, Gurbinder Singh Bedi now writes to us from Noida, holds 30 shares of JBM Auto, which he's bought at 2,084 rupees. So he's sitting on a loss, wants to know the prospects of this particular stock. Do you think that there's further upside from these levels, Kush, for this particular counter, probably to even get back to those buy levels at least?
Oh, absolutely. That and then some more. The stock had seen a very sharp downturn. But if you see in the last 3 weeks, the revival also has been, rather commendable. So my suggestion would be hold on to this one. There's a very bright possibility that the stock could go to 2100 and then 2350 levels also. So if time horizon of, let's say, anywhere from 6 to 9 months is under consideration, then he should continue holding on to the stock. Also, from here on, the risk reward ratio is extremely favorable in terms of holding on to this. 1750 is a strong support zone. So I would place my stop loss there. But as I said, if money is not a necessity just yet and time horizon is anywhere from 6 to 9 months, hold on to this. The stock has the potential to go up to 2300 levels also.
Oh, okay. But its 52-week high was 2,400 odd. Do you think that maybe there'll be resistance at those levels then?
Precisely, Ekta, and that is why the target is just below that, because the levels of 2400 were not really sustained. If you see on the weekly basis, once the stock crossed the 2250, 2300 mark and then went higher from there, we didn't really have a strong closing at that level. Hence, it's not a bad idea to perhaps book out the stock at 2300 level, just below the 2400 52-week high. Also, that is significantly above, or at least in some percentage points above the buying price. So he'll still be exiting at a profit.
Okay, all right. So that's on JBM Auto. That stock has definitely been a multi-bagger. And Astha, if you look at the fundamentals, they just won an order worth around, I think, 7,500 crores when it came to electric buses. What's your thought in terms of JBM Auto? Do you think that it's a long-term buy and one should just hold on?
We are recommending just a hold at the present moment of the time for the price target of 2200 to 2300. So talking about this counter, yes, they have won an order, and if we talk about this counter, they have a charging infrastructure which is only open to B2B segment, and the company is one of the leading manufacturer basically into the auto systems. So looking after this order which they have won, I think it is for 13 some electric buses, and the figure is around 1300 and odd. So pardon me if I'm wrong about the figures. But it is for the electric buses, and under PM E-Seva, they have got this order. So yes, this order book and this order is a main booster for the company. And we can see a strong financial performance going ahead also. But recommending hold at present moment of a time with the price target of 2200 to 23.
Okay, all right. Well, definitely a lot of momentum for the markets considering the record highs that we're seeing in today's trade. Mid-cap index above 50,790 as we speak. We have the Bank Nifty, which is cruising away in today's trading session. Really the toast of today's market, up over around 1,100 odd points. As you can see, statistics such as ICICI Bank, which has crossed 8 lakh crore for the first time ever in terms of market cap. Mayank Jain now writes to us from Noida. He wants to buy FMCG stocks and wants to know whether or not he should buy shares of ITC. Well, what's your recommendation on this one, Astha? Let's start with you.
So yes, he can buy ITCs. First of all, with a price target of 470 at the initial level. So there are major developments which are going on in this company, as we all know, like the demerger into the ITC hotels, 1:10 ratio for that. And apart from that, what we are expecting that this cigarette business will yield the volume of around 4 to 5% in the upcoming results. So we are expecting a growth of 4 to 5% in this cigarette business. In fact, what we are expecting that apart from the paper business, other businesses will do well for this company and other segments will do well for this company. So I think, yes, ITC is a good buy at the current level. Although price target which we are giving at present moment of time is 470 to 480.
Okay, all right. And what about you, Kush, on ITC?
A buy from my side as well. We need to make portfolios for all seasons, right? So even if momentum is not in its favor, there is definitely some sort of protection that ITC does bring into your portfolio. The targets are very similar to what Astha said, 470 to 480 kind of zones. So for that, he can enter. Also, there aren't too many alternatives in the consumer space right now, FMCG space right now. But two stocks from slightly different setup. Colgate Palmolive, that is one stock that has risen quite sharply, quite smartly. So Colgate Palmolive is a buy on dips that one can consider. And the other stock which is seeing some sort of a revival, opposed to a lot of the players which haven't really found their feet yet, is Godrej Consumer. So on the revival front, Godrej Consumer Products is something that I have on my radar. So ITC, Colgate Palmolive, and Godrej Consumer, these are the three stocks that from the FMCG space that I will have on my radar.
Okay, all right. Well, that's a couple of queries that we have. Well, for the markets, like we've been pointing out, it's a fabulous day. We have the Bank Nifty, which is up around 2.4%. Lot of stocks which are moving around. And besides the usual, we have even Central Bank of India from the PSU banking space, which is up around 3.5%. Bank of Maharashtra, which is up around 3.6%. And separately, we have stocks such as Z Entertainment, which is seeing traction as well. So that stock is up around 3%. Max Healthcare is doing well. It's up around 2.8%. Remember, it was absolutely flat, so there's been a little bit of traction on that one. Overall, seems as though it is a good day of trade. It seems as though we're definitely going to close with good gains. The Bank Nifty has already hit a record high. Just want to point out that there are a couple of these sore losers which continue. So Spark is in a lower circuit in today's trading session as well. It's lost around 33% of its market cap this month. And Vodafone Idea also post the FPO. Now that stock is down around 3%. It's lost around 15% this year. So do watch out for both those counters. But that's all the time that we have in the show. Do remember to email us your questions. We'll address them with our experts. Closing bell up next.
Co-powered by